Okay, let's do it.
All right.
Brooke and I were talking about things that we can do during this time and going forward to just get good information out.
Sure.
And one of the things that we were talking about that seems to be really a big question right now with people is with the interest rates, well, at least a couple days ago, falling dramatically, that, and also with the uncertainty right now and what's going on, that people are thinking about whether refinancing is something that they could do. I invited you, Robin. You and I have known each other now for 17 years.
A long time, yeah.
Now you also have made a move recently. So tell me a little bit about where you are now.
So I have joined a company called Cross Country Mortgage. We are a local company. My branch office is located in Wayne. So we're over on Lancaster Avenue. We are a national company, so we do mortgages all across the United States. It's a great company, lots of really great technology, good product mix, really competitive rates. So it's a new world for me, but I'm enjoying it.
That's great. Current state of the world is a little scary. It's affecting everybody. The COVID virus, especially now in Pennsylvania, we're all kind of on lockdown, and the real estate industry is still waiting for clarification on what we are allowed to do and not allowed to do.
Mm-hmm.
And one of the things that I know that they probably are thinking about is whether or not it's a good time to refinance. Mm-hmm. And I know that's a big question because there's things that go into it. So I just wanted to talk a little bit about that. When somebody is thinking about a refi, what are the reasons why they're thinking about refinancing?
Yeah, so the most common reason to refinance is to reduce your interest rate or reduce the term of your mortgage. So this is still a good time, although there's a lot of volatility in the market, and we've seen mortgage rates go from our lows to a bit higher than we're used to in the last few months. But there are many reasons why you may want to consider to refinance besides lowering your rate or lowering your term. And those things could be getting rid of private mortgage insurance, which can be very expensive. So if you are paying a decent amount monthly in PMI, as we call it, there's a possibility that you could get rid of that private mortgage insurance, which could save you, maybe a few $100s, depending on what the cost is. The other reason why people may want to consider refinancing, especially in today's environment, is to take some cash out and pay off some high rate interest credit cards that you may have outstanding. And that obviously you would need to have a decent amount of equity in your home to do a cash out refi, but it's a great idea. Get some of those credit cards paid off. Interest is still deductible on your mortgage. The interest you're paying on your credit cards is not deductible. So there are just a couple of really good reasons why you might want to consider a refinance today.
What generally is the cost of doing a refinance?
So there are costs. You are going to pay your mortgage fees over again. I would estimate that you're going to pay in mortgage fees over $1,000. That generally is going to go to pay for your appraisal, your credit report, a tax service fee, a flood start fee. And most likely you're going to pay a processing fee. So I would estimate between $1,000 and $1,500 for mortgage fees. You're also going to be paying title fees all over again. And title fees are regulated by the state of Pennsylvania. They are a percentage, or not a percentage, but there's a cost based off of your loan amount when you refinance. And then you're also going to have some additional title fees. So depends on the amount you're financing, but it's several $1,000s to refinance. However, Most individuals, when they refinance, roll the cost of the refinance onto the balance of their mortgage. So there's not an out-of-pocket expense, which helps.
Is there a point at which it would be better for them to pay the cost up front of the refi rather than roll it? I mean, is there a way that you advise people?
Yeah, so a lot of times I will speak to borrowers about bringing cash to closing because in most circumstances, if you're escrowing for taxes and insurance, you're going to get a lump sum back from your current mortgage lender when you pay off your mortgage. So whatever is left in your escrow account is a refund back to you within 30 days of them receiving the payoff.
Okay.
Not only that, but in most circumstances, you're going to skip a mortgage payment when you refi. So you're going to save 1 month of mortgage payments and you're going to get a check back for whatever's left in your escrow account. So what you can do is bring a check to the settlement and then reimburse yourself when you have these savings in the next 30 days.
Are refinancing costs tax deductible?
No.
Okay.
No, they are not.
Okay. But the interest is.
But the interest is, and
Yep.
that's huge for a lot of people. Mm-hmm.
What are some of the things that you need people to tell you, the information you need when they come to talk to you about a refi? What should they be ready to talk to you about so that you can make a good evaluation for them of whether or not it is a good time for them to refinance?
Of course, yeah. So I would suggest that the first thing is you really do, or you should have an idea of how much your house is worth today. If you bought it 5, 10, 15 years ago, the value is going to be very different today than what it was when you bought it. So I would suggest reaching out to maybe your real estate agent and getting an idea of what the value would be, because you will have an appraisal done in most circumstances. We are seeing that in some circumstances, an appraisal is not required, but we're still going to need to know a good idea of what you think your house is worth.
I'm just curious, what are those circumstances that you're seeing where an appraisal isn't required?
So that is something we're trying to determine. When we put a borrower's information through our automated system, the automated system relays to us whether or not an appraisal is required. And what we're learning is that there is a database of appraisals that Fannie and Freddie have collected over recent years. That will be a guiding factor as to whether or not an appraisal is required. So if you purchased your home in the last few years and they have that value in their database, or they have values of homes that have closed recently in your area and they've gotten appraisals, they take that information, and that is how they're going to determine whether an appraisal waiver is recommended or not.
Okay, good to know. What are the most common questions that you're coming up upon with COVID-19 happening? What are people asking you about?
So I think everyone's biggest concerns with COVID is how long is the process going to take, and am I going to be able to close or settle within the normal period of time? So that's a hard question to answer because I don't think anyone really knows. I did settle on a refinance on Friday, went fine. We were limited as to how many people were to be in the settlement room, and but it still went without a hitch. So for the time being, it's business as normal, and we'll see what happens going forward. But I think that's the biggest concerns.
For a refinance, are you still having to do tax certs and use? You don't have to do use and occupancy, right, for a refi?
Right. The biggest concerns are appraisals, number one, because I think there's some pushback People don't want other people in their homes. So it's going to be interesting to see what happens with that, as well as title companies being able to, like you mentioned, get tax certs. Right now, I think it's okay, but with the courthouses closing, I'm not sure how they're going to handle that going forward.
Gotcha. I mean, a lot of the taxes information is online these days and accessible, right?
It is. But I think the biggest part of it, is, especially right now, is are the tax bills paid?
Right.
So that's really what the tax cert is showing us, is did the mortgage company, if those taxes were escrowed, did they pay them? And what's the next tax bill that's due? And how much do we have to collect? So that's the issue.
Okay. What other issues are you seeing right now that people are, I mean, are people coming at you both for refis, and is there a difference between refiing or doing home equity for people? Does the home equity get them cash faster?
Well,
or does,
the home equity lines of credit are not based on fixed rates. Okay, so the home equity lines of credit are really based on the prime rate of interest, which, let's face it, right now, it's probably the lowest it's been in quite some time. However, it is an adjustable rate, and it will most likely end up going up, as opposed to doing a fixed rate mortgage where you don't have that risk. You have a fixed rate for the term of the loan. So if you need money fast and you have enough equity to do a home equity line of credit, depending on what you want to use it for, there may be reasons why you might want to do a home equity versus doing a 30-year fix. But for the most part, when I talk to individuals, they do end up going with a fixed as opposed to an adjustable, just because the fixed rates are comparatively low right now.
Now, I know you said the rates are bouncing around a bit. I know, when the Fed first lowered their rate and the bonds were going crazy.
Yes.
I heard that the rate the rate was as low as, slightly under 3. Has it settled in, or is it ranging, in an area right now?
It's been a very bumpy ride for the mortgage industry the last couple of weeks. At our lowest, I would say I lost someone in on a 15-year at 2.5.
Wow.
Probably the lowest I've seen in a very long time.
Yeah.
I think the best 30-year fixed rate was maybe 3.25. However, that was for a very short period of time. What happened after that short period of time is interest rates actually went up. A lot of people think that when the Fed reduced the short-term interest rate to 0, that impacted our 30-year fixed rates the same way. And unfortunately, it had the reverse impact for several reasons, right? So one of the reasons why is that there's huge concern about unemployment.
Right.
Okay, and so that was one concern. Another concern is the capacity for lenders to work through the volume they're receiving.
Yeah.
Is very difficult to uphold customer service levels. So some lenders actually increase their rate
to slow down the volume.
Yes, it's like a supply and demand.
Right. Okay.
To be honest with you, most concerns are, how is this going to impact interest rates? And we really don't know. I mean, it's a day-to-day, very fluid situation, depending on how the markets react to the additional news we're going to hear from the government, is really going to have, it's going to be a little rocky road ahead, I think.
Right.
Hopefully rates are going to stay below 4. We've seen a little touch above 4. It depends on credit scores. People, please pay your bills. I know it's going to be a difficult time, but whatever you can do to stay on top of your bills. It's going to have a big impact on your credit scores.
What is the best way for people to get in touch with you?
So the best way to find me is you can go to my Facebook webpage or business page. You can certainly find me there. It's Robin Bowman /CCM. Or please call me on my cell. I'm happy to answer any questions you may have. You can reach me there at 610-246-2896. And of course, via email, robin.bowman@myccmortgage.com.
That's great. So Robin, it's been great talking to you. I hope everybody in your circle is good and healthy and staying safe.
Same to you, Janet.
Yeah, and look forward to doing some business with you soon.
Sounds good. Stay well and have a good weekend.